Hey DeFi community, Kevin Moeller here with DeFiancy for your next market insight video. And today we're going to cover several things. One, the Feds are talking about raising the rates in traditional finance, what is commonly referred to as TradFi. What does that mean for cryptocurrency? We're going to talk about that. What's the overall market structure look like? We're going to cover that today. And we're also going to cover the narrative. What's going to happen here in the near future, in particular to layer 2. What do we see with layer 2? What is that? What is it going to look like? How can you best potentially position yourself to profit from this upcoming narrative? We're going to cover that today in today's DeFiancy Insight video. So let's get right to it.
What is going on, everybody? So let's just jump into this. Yesterday, as you probably noticed, we had a pretty significant pullback in the markets. This was not necessarily surprising. Many people were speculating that we could have a violent move in either direction, up or down. This was because we had a lot of open interest, and it was actually near all-time high. Typically, when you have that kind of situation, all it takes is for the wrong side to lose, and you have what's called cascading liquidations. We saw it back in early December, and we really saw a lot of this back in late May of 2021. So this is not something that was really surprising, but it did really rattle, and it's still rattling right now, the crypto industry as a whole, especially the speculators, the traders, right? A lot of them lost a lot of money, and this really changes the paradigm for some people. A lot of people, they thought, well, if we can't hold 45 and a half, it was roughly where it was right here, that this would signal a pretty significant continuation downwards. Now, we're not going to give any kind of, we're not going to speculate on necessarily where this thing will go, like where we believe it will go, but I guess we kind of will in a way. We're going to talk about, the different, paths forward here. It's pretty simple in my mind, actually. But before we go into these two different scenarios, let's just talk about why this happened in the first place, beyond, just cascading liquidations. What triggered the cascading liquidation, right? Well, traders are battling it out, or they were battling it out right here on this 45 and a half line, basically. And notice how many times we hit this. This is on the daily, so each one of these candlesticks is 1 day. We touched it 1, 2, 3, 4, 5, 6 times. That's pretty rare, actually. I mean, if you go look in the past, you don't really touch down on a spot that long without making a move in a certain direction, you see? So everybody was kind of assuming this thing was fixing to make a move, right? Now, the reason why it went to the downside is because of the Fed coming out with the Fed hearing that was yesterday and saying, basically we're going to have to raise rates earlier than we expected. So they're going to roll out this campaign, right, to increase rates, to try to, it's basically just to try to lower inflation or slow the rate of inflation, right? The whole transitory idea that we were talking about, inflation being transitory, that is being laughed at, and they realize this is significantly hurting. This is going to significantly hurt the world economy if we don't get this figured out quickly, the inflation problem. So this is high on their agenda to fix this, and they've come to conclusions that the only way, and it's kind of obvious, I'm not an expert on inflation, but it is pretty obvious that you have to raise rates to try to combat that, at least the increasing rate of inflation, which is what a lot of people are worried about. So that's why this happened. Now, over here at 45.5K, it was assumed that we were going to have rates raised anyway. So we had the hearing back here in December that actually came out and basically confirmed that yes, we were going to raise rates, but it wasn't anything that wasn't priced in. This was not priced in. So speeding up the timeline basically scared a lot of people, and it caused this liquidation. And some people may have just exited their positions, but there was enough people that were scared enough to make this, to really crumble the price here. And It's important for me to mention that because we've talked about this in the past, but it's going to be very difficult for crypto to move in the upwards direction with these rates going up, because the whole idea behind Bitcoin being a good investment, or the fundamental idea behind it over the past year, was because of rates being low. Because like any time that they came out and said, yes, we're going to keep rates low, Bitcoin would pump. Okay, so this is not good for Bitcoin, but we actually believe that this is not going to be the end of the world for crypto. We could easily see a continuation down, to the 30, to the 40K range and then lower. Okay, but we're not going to speculate on exactly where it will go. But I'll say this. The two paths here are kind of simple in that if we don't hold this level, okay, and equities are going down and they continue to basically go down and maybe even crash, so the stock market, if it crashes, crypto is going to go down very far with it. It will be very severe for crypto. I'm going to give you guys the truth here. If the stock market crashes, if we have a serious problem in traditional finance because of these rates being raised, it will be a much worse problem for crypto in terms of losses, right? So like if the S&P 500 goes down 10%, I can promise you Bitcoin will go down a lot more than that. Okay, that's just how it is, unfortunately. So that's something to consider. But let's say that people get used to the idea of rates being raised and basically we can create a new narrative. Bitcoin has to get a new narrative, but we're going to go into basically what I think is going to be the narrative going forward. And it's going to be way outside of Bitcoin. Bitcoin is not going to be exciting, in my opinion, over 2022. Let's go into, I'm showing you this because I want you guys to follow this guy, Larry Cermak, at Lawmaster on Twitter. He has his little predictions for 2022. And I believe that this is a very good summary of kind of where my head's at. And I think many other people's heads are at too. And that's, we're probably going to see a significant narrative around Ethereum layer 2 in the next few months. And that's something DeFiancy is going to focus on pretty heavily, is like what is going on with the layer 2s? Which one should I be, interested in? Blah, blah. We want to answer those questions for people. I think that these layer 2s, like Arbitrum, Optimism, Starknet, ZK Sync, they're all going to be basically like Avalanche and Solana. Now it's kind of apples to oranges in a way because they're not built to be a layer 1. And I always struggled, or I've been struggling with the idea, well, how do these layer 2 tokens actually become valuable if they don't have if you don't need it to operate transactions or to execute transactions on the network? Well, there's actually a protocol called a rollup, optimistic rollup called Metis. And I should have pulled it up, but their system is different. So you need their token to make a transaction, but it still rolls up transactions and pushes them down to ETH. So Ethereum is still, the base layer, but you do need its token to operate on the network, which I think you're going to see this model more and more, to be honest, because these roll-ups they're going to have to compete. It's going to be like the layer 1 battle now. Okay. And I think at some point after they start getting massive attention and massive amounts of users are going to be pushed onto them by potentially Coinbase and Binance and people like players like that. I know Coinbase is planning on it. It's a fact. A lot of these other layer 1s like Near and Solana and other ones, maybe not Solana, but who knows? But blockchains like that are going to try to move to layer 2. They're going to have to. I think they're going to realize that that's in their best interest to survive, and they can still, their ecosystems can still be economically sound and generate revenues, being on top of Ethereum. We'll see. But I think that is what you're going to see. That's the narrative that's going to be growing as we approach the merge. Okay. And we're going to be, like I say, we're going to be like super heavy on layer 2 stuff, because I really think that's where the opportunities are going to be. I think it's going to be a rat race to accumulate these tokens. Once people realize that they will be profitable and useful assets. They're not going to just be governance tokens. Productive assets is what I should say. So that's something that we'll talk more about later. These are to actually go a little bit more into detail, I forgot I had this. These are some of the networks right now. Layer 2 networks. So these are, you can think of them as like little blockchains on top of Ethereum. They're actually, they're a little different. But think about it like, it's a whole nother network that is on top of Ethereum, meaning you get to derive the security from Ethereum, and you can have, like Solana or, Binance Smart Chain, like speed and fees. Now you may say, why is that important? Well, it may not actually be important for some users. Some users they're not going to care whether they're on Arbitrum, which is on top of Ethereum, or if they're on Avalanche. But the corporations and the big money players will care. You know why? Because at some point, not necessarily now, we'll go into this more in detail, Arbitrum is going to be significantly more secure than Avalanche alone. It will be significantly more secure than Solana. And it's because it will directly inherit the security from Ethereum, but it will also have very high throughput, tens of thousands of transactions per second. Once these things really start to get going, they kind of have training wheels on them now, where you can't go as fast as some of these other layer 1s, but they will get as fast as them, and they will be as cheap. Who do you think Coinbase is going to load their user whenever they actually start to onboard users to layer 2s, or they actually build some kind of application on layer 2 and it's built into Coinbase? What do you think they're going to use? Well, they have to eliminate risk. If Solana is fast and Arbitrum is fast, and I shouldn't use Solana because it is it's a unique layer 1. So let's say let's just say Avalanche. Who do you think they're going to choose? Avalanche? Are they going to directly onboard people to Avalanche with its security that is not terrible, but not as good as Arbitrum? They're going to go to Arbitrum. Okay, and I'm not saying they're going to go to Arbitrum, but Arbitrum or Optimism or Metis. I had mentioned them earlier. So all three of these are optimistic rollups, and so is Arbitrum. It's an optimistic rollup. You see this OP here. That is, I think, that is an indicator that these are basically all Optimism clones, or it's based off the original Optimism code. Because as you can see, this is also an optimistic rollup. Anyway, keep your eyes on these guys, because once these tokens start to come out, they're going to be valuable. These tokens are going to be valuable. And it's not going to be obvious to people at first, but we want to get people ahead of the narrative, and hopefully people will take advantage of it. Okay, so that's pretty much all I got today, guys. Again, I'm going to finish off. When everybody is freaking out and everyone's saying it's going to be the end of the world, the markets, it probably isn't. Okay? Contrarian thinking is a very valuable mindset to have, or a very, very, very valuable way to operate in this industry. The crowd is almost always wrong. When everyone is saying that the world is about to end in crypto, it's not, probably. Okay. Now that doesn't mean you don't hedge your bet, your risk and everything like that. But not to toot, Defiancy's horn here, but we were telling people to be careful and to think about getting out way up here, okay, in the 60Ks and the 50Ks. Okay, once this happened here, it should have been known to everyone that we were going to keep going down, and that's what we said. I said if it broke, 48K, we said this in a video not too long ago. I was like, we are going to 42K. Okay, look, it's not rocket science. Okay, we don't have a crystal ball. Markets move to places where high points or high magnitudes of volume has occurred before. That's how that's what we call resistance and support. It's based off of where a lot of volume and transactions have occurred previously. So we know where these things are going to go if they do go in a particular direction. Okay. So I don't think people need to be really that worried, but realize we could have a continuation downward, and it could be a pretty ugly bear market. But I don't think people need to irrationally sell everything and freak out right now. Think about it. Let the market, kind of play out, I guess, and just be rational, be logical. Don't be emotional. The people that are selling down here, that were selling whenever we hit 42K yesterday, they probably feel pretty silly because they could have just sold, 3 or 4% higher, right? So just keep that in mind, guys. Anyway, that's all we have. Until next video, guys, happy hunting, friends.